Hey everyone. We'll give a few more minutes for people to jump in, but definitely really looking forward to this space. We do RWA spaces every other week, and this week we have the privilege of talking about Infineo and really diving into insurance finance. So let's give a couple more minutes for people to roll in, and I'll get into it. Hey Jackson, Izzy, Bob, Alec.
How you doing, Noah? You can hear me all right?
Yeah, I can hear you.
Beautiful. Thanks for having us.
Of course, we're looking forward to this. Okay.
Thanks, Noah.
People should be rolling in. I'll get started in another minute or so. Thanks for everyone who joined. All right, well, I guess we'll get going and let everyone roll in as they do. But like I said, my name's Noah Pollack. I'm hosting the space from the Infineo account. On the panel, we have Dr. Bob Murphy, Zuhayr, CTO, Jackson, our community manager, Alec Beckman, our head of BD. We're excited for the show. We do RWA spaces every other week, Tuesday at noon Eastern time. We have a variety of guests ranging from, people who do real world assets and watches, real estate, different banking products. But this week, as we have our, flagship product, the policy ledger rolling out at the end of the month, we thought it'd be appropriate and honestly awesome for everyone to hear about, how we plan on changing the insurance finance space and specifically how we're bringing Infi to DeFi. For those who don't know, Infi, insurance finance, and DeFi is decentralized finance. So we're going to go through a bunch of things, like I said. We're going to go through Infineo's vision of decentralized insurance finance, tokenizing life insurance policies, how Infineo is transforming life insurance, really what this means for policy holders, increasing liquidity in secondary markets, ensuring trust security, just making sure people get those debt benefits and, everything's transparent. And also we're going to talk about why the insurance carriers actually is a good thing for them. So to start it off, Alec, I don't know if you want to give a little rundown real quick about, what we're doing and kind of the whole idea behind it.
Yeah, no, I appreciate it, Noah. And, where we can start is, we're building multiple different ways to create access and also liquidity on whole life policies, essentially creating it as a new asset class. These assets are very, difficult to originate. There needs to be insurability when you typically take out a policy. And so, it's really hard to get them. They're a very commonly used asset with banks and with corporations holding on their balance sheet, policies on their own people. There are limitations in the way that policies can be sold, transacted, and gain liquidity on. So essentially what we're building is different ways within the tokenization and digitization realm to add efficiencies to all these different places, including being able to sell, being able to invest, and ultimately just creating easier ways to access and create liquidity on whole life.
Thanks for that, Alec. Dr. Murphy, do you mind chiming in, I guess, for some more background on insurance finance as an idea and kind of the minimal history behind it with Nelson Nash and how people are using it today?
Yeah, sure thing. So real quickly, because I know we probably have a lot of people who've been listening to these things, there's a way you can use permanent life insurance, and we here at Infineo, we're experts on using whole life particularly to build up cash value. So the idea there is if you surrender the policy to the carrier, you get a cash value payment made in exchange of that. And so that marches up over time, and it's very predictable. There's certain guarantees, and then also in a typical year, you're issued what's called a dividend that boosts the floor of that cash surrender value. And then once you get a dividend declared and roll it back into the policy, it can't go down from that new plateau. So it's a very dependable, predictable performing asset in that respect. And what you can also do is just borrow against it from the carrier. So the carrier uses your cash surrender value as collateral, and then you can borrow against them. So in Infineo, we're trying to automate these processes and make it more agile and nimble by introducing blockchain and so forth. But that's the basic underlying structure. And so the idea is these are great assets in which to store your capital to accumulate your financial wealth, and that if you see some opportunity, you can, or you got to have an expense, it's coming, you want to buy a new car, you got to send your kid to college, what have you. This is a great way to manage your cash flows and to bulk up a bunch of your savings in the form of a lot of cash surrender value in one or more of these whole life policies. And then when you have to make the expenditure, you go ahead and borrow against the policy and make it that way. And so there's a lot more flexibility. The payback schedule is entirely up to you. And so there's just, do you get the funds virtually immediately? There's no credit check. There's no looking at your income sources, because the lender is itself guaranteeing the collateral. So that's just why it makes a lot of sense to use these products, not just for death benefit coverage, but also as a cash management vehicle. All right, so I'll stop there, but that's the basic idea.
Yeah, that was awesome. Thank you for that, Dr. Murphy. I guess lastly, to wrap up the intro to all this, Zuhayr, do you want to kind of dive into the infi to DeFi thing and, share your story about how it made sense to you? Because I think that's very relatable to a lot of people.
Yeah, sounds good. So can you just clarify what in what aspect you want me to talk?
Yeah, I mean, I think it's just kind of comparing, in insurance finance to DeFi, kind of why that whole process makes sense. And I guess I was wondering if you could share your story about how it kind of made sense to you, because I think it's very relatable.
Yeah, sure. So when I first joined Infineo, and the reason that I was intrigued by the concept of infinite banking and just infi generally is because what I was doing in DeFi sort of mirrored this real world application. And I was like, wow, there's real parallels here. And if we were to digitize this thing, it could really enable a whole host of new use cases in DeFi that don't exist today. And so what I'm talking about is, for example, staking, when you deposit collateral and then borrow against that collateral that is in this vault contract. That's very, very similar to the concept of infinite banking, where you are depositing cash into this sort of savings instrument and growth instrument, and then you can borrow using policy loans or other methods, or collateralize and borrow against the thing that you're depositing value into. And so you become your own banker. You're building your own banking system. And so I was doing that without knowing that there was a group of people and a movement in the real world that were doing it too. I was doing it in DeFi, and there was infi happening in the quote unquote real world. And so I was super intrigued, and ever since then, it's been a really awesome progression from zero to building everything that Infineo is on the road to build. And yeah, that's sort of the background for infi to DeFi, DeFi to infi for me.
Yeah, and really quickly, Zuhayr, I love the way that you said that, and I have to agree, because I did not come from the life insurance world, and I really came from the crypto and actually more even the real estate side. And when I first was explained, kind of what Infineo was doing, I didn't really understand it, but it actually was able to resonate with me very quickly, because there are so many parallels between DeFi and crypto, and then the principles of whole life and infinite banking.
Thanks for that context, Alex, and also Z. Alec, I was wondering if you could kind of dive into a bit about what we mean by digitizing life insurance, because I know you really come from a deep understanding of the real world asset and digitization space. So if you could dive in a little bit of that for the listeners, that'd be great.
Can you hear me?
Alec, are you there?
I can. Yeah.
Oh, sorry. I was going to say, do you mind diving a little bit more into about what we mean by digitizing life insurance? Because I know you come from a deep understanding of the real world asset and tokenization space, and kind of just give some context about, what we mean by digitizing and then putting it on chain and all that. I guess we lost Alec. Z, do you want to dive into that a little bit while Alec figures out his connection issues?
Yeah, sure. And yeah, this happens on Spaces sometimes. I don't think Alec can hear you, but I think he can hear me. So yeah, so basically digitization and just generally, I think provenance as a choice for digitizing life insurance, it just makes a lot of sense. And I think that part of it is because the parallels between the financial applications that exist on the provenance network from a digitization perspective are sort of right in they analogize very well. So HELOCs specifically translate the way that they've done that. The sort of infrastructure and the structure of the digitization of HELOCs translates very well to the way that we're trying to digitize life insurance, where there's sort of this base asset, and then you're creating a sort of digital representation of it on chain, which unlocks greater velocity of commerce and other applications that would not be available otherwise. And so I think digitization is one element, and then the choice of infrastructure for the digitization is another element. And so that's sort of directionally we're going towards provenance blockchain, and then with provenance blockchain towards digitization of a fully digitally native asset.
That's great. Jackson, I was wondering if you wanted to chime in and add any context behind tokenization and real-world assets, because I know you have a deep experience with it as well.
Yeah, sure. So really what caught my eyes with what we're trying to do at Infineo was that we're taking a real-world asset that isn't necessarily difficult to tokenize, whereas other assets such as real estate come with a lot of complexity and nuance to actually getting them on chain. A life insurance policy typically is just the premium payments that come into it and the underlying cash value that the insurance owner has access to then, and the potential death benefit if they die within the period, if it's term life insurance, or with whole life insurance, if whenever you die or reach the age that the policy is paid up at. And so I thought it was really interesting that we're taking an asset that is really just cash collateral and bringing that on chain and really just leveraging the efficiencies of DeFi, which is what tokenization is built for. Right now in the tokenization space, I've seen a lot of attempts at tokenizing real estate compliantly and a lot of non-compliantly. And then additionally, a lot of talk around tokenized treasuries, money market funds, and securities. And while treasuries and securities and money market funds will definitely benefit from being brought on chain, I really do think that the benefits are that much stronger for asset class that is super paper-based, like life insurance today.
Yeah, and Jackson, just to add on top of that, I think you raised a good point about like money market funds and treasuries. Those are probably the two things that have had the most success in terms of being brought on chain. And I think the thing that makes them so easy to bring them on chain is that there's like real attributed value and real numbers behind it. There's no, like, everything's very objective. There's no subjective, valuing or appraising of these assets. And so, like, looking at this, seeing that fixed income assets have had a lot of success, I think being able to bring a fixed income alternative that has suffered from a lack of liquidity, and also a lack of, origination and I guess even awareness, so just whole life, can really, there's really a market for whole life in the tokenization and, space and industry. So I would guess.
Yeah, I mean, we would definitely agree. Dr. Murphy, I know unclaimed death benefit was mentioned. Do you mind speaking a little bit about that and the issue that goes around that in the life insurance industry?
Yeah, sure thing. So the idea is right now, if, what is a life insurance contract? It's saying there's an insured party and there's one or more named beneficiaries. And so as long as the owner of the policy keeps making the premium payments, if the insured dies, then the death benefit payments go to the beneficiary or beneficiaries. And so what can happen in practice is, what happens if the insured dies and, the insurance company is aware of that, but they can't get a hold of the named beneficiaries. So the insurance company, has this death benefit they're supposed to pay. So what happens, certainly in the United States, is it's not, you might think, oh, the carriers just sit on it. Well, they're not allowed to, that the government I think the regulations depend on different states, but typically the government takes the money and says, "Oh yeah, you don't get to keep on hold on, but don't worry, we'll hold on to it." And then if somebody can come up and show that, "Oh yes, I'm the beneficiary of that," then they can get the funds that way. So it's a these funds in a sense remain in limbo, and so that's again part of what we're doing here at Infineo is we're coming up with a very quick, easy solution so that if people register their policies with us, among other benefits, they can knock that out right away and just give the contact information. And we have some other verification protocols so that, you that won't happen in your situation. So, we have the peace of mind. If I'm paying these premiums for decades, perhaps, I know my beneficiaries are going to be able to be notified and get the money that they're owed.
Yeah, it makes perfect sense, and obviously a super incredible use case. Z, I was wondering if you could chime in and kind of talk about the back end, maybe if there's a simple way to explain how adding blockchain to these policies increases transparency and ultimately provides a better service for the customer.
Yeah, there's two aspects to it. There's the user experience aspect, and then there's the functional financial utility aspect to digitizing these policies and placing them on chain, right? So the first aspect is sort of because the life insurance industry is so archaic, generally speaking, the user interface or the user experience and the tooling available in order to see your policy details properly, to parse things out and plan based on your own banking system or your cash value and the way that you want to sort of deploy capital and sort of leverage your policy. The tools available are very scarce, and also the interfaces available to view the data you need to make the proper decisions are also very sort of lacking. And so that's the first portion where the policy ledger addresses this issue of user experience and sort of analysis of data, etc. So that's the digitization piece. So when you digitize your policy on the policy ledger, you will be able to have a much better experience around everything related to your policy's data and information and number crunching and with AI enhancements as well. So you'll be able to ask questions about your policy to an AI model that'll give you personalized answers, right? So that's sort of on the digitization side. And then when it comes to the actual blockchain side of things, what the blockchain allows for is transactional capabilities. So basically a secondary market for life insurance policies where none exists. And so it allows you to take your policy and then sell it at fair market value rather than surrendering it, where there's $360 billion of surrenders every year, because there is no surrendering back to the carrier, because there is no secondary market that you can use to sell your policy or get liquidity for your policy at fair market value, right? And so that's sort of the where the blockchain comes in. And then also on the lending piece, get frictionless, very quick loans against this policy because it's now in a backed NFT, BNFT format, some digital NFT format of your policy. And so you can do a lot of the financial transactions once your policy is sort of unlocked in digital format on the blockchain. And then, as I spoke to, there's the user experience and analysis component on the prior to the sort of blockchain marketplace piece comes into play.
Yeah, that's great. Thank you for that. Next thing I was wondering, and I think it'd be a really interesting part of this conversation and kind of more of an open comment, not directed at anyone specifically, is I guess from the viewpoint of the carrier, why has no one done this yet? These insurance carriers have billions and billions of dollars and all the resources in the world. And I guess the second part of that question is, the possible friction that they could face adopting it, or, people could face while trying to implement Infineo's things. Like, why would someone not want their policy online, and the misconceptions around that? I know that was kind of a two-part question, but anyone who wants to chime in, feel free to. I guess I will call on someone. Jackson, I know you've been looking into this a bunch. Do you know do you want to talk about kind of the benefits from the carrier's point of view?
Yeah, of course I can try to. And I feel like Dr. Murphy might be able to help me out here. And so from the carrier side, the way I understand the benefits are that a carrier's main goal is to really write as many life insurance policies as possible and keep those in force. And what traditionally happens right now when someone wants to surrender their policy is what it's called. You can surrendering your policy is the most common way of extracting the value from it immediately. And so what happens when you surrender a policy is you actually give the policy back to the carrier for the underlying cash value. This is only possible with with permanent life contracts. I believe that Indexed Universal Life also have cash value components that can be surrendered. But a surrender with like a term policy just means you're going to stop paying premiums and that the death benefit's no longer in force. You don't receive any cash. And so the thought is that if instead of surrendering their policies, most people will turn to a secondary market and sell to a buyer that's interested in keeping the policy in force, it creates a win-win-win scenario for the carrier, the policy owner, and the beneficiary by essentially keeping the funds in motion, allowing the insurance carriers to retain the premiums that otherwise would have stopped, and then additionally allowing the policy owner to potentially retain some death benefit in the case of our marketplace, but more than that is extracting the cash value from the policy. And so, yeah, basically the benefit to the carrier is that they keep these policies in force for longer and collect more premiums. Dr. Murphy, I don't know if I missed that or misexplained, but...
Yeah, I'll jump in. No, that was great, Jackson. It was like in, if you guys saw the movie Hoosiers, when the head coach tells the ref to throw him out because he wants the assistant coach to have to get in there and see if he can rise to the challenge, and you just crushed it. But yeah, just to emphasize some of the points you made there, what Infineo is doing is night and day difference compared to the typical life settlement market. So in the typical life settlement transaction where somebody wants to get rid of their policy and then some outside people come in and think about buying it, those buyers are interested in just a quick turnaround because it's a death benefit play. And so that's why if you go to the websites or look at the TV commercials of these typical life settlement companies, they're showing like older couples, frolicking on the beach or whatever, at the pool, but they're all people who are clearly retired. And that's why, because you go look at their websites, the FAQs about whose policy you have to be older, or you have to have, a medical condition where your life expectancy is low. And so from that, you can understand then why, that's a kind of situation where the carriers, maybe they don't want those policies and so there's some difference of opinion there in terms of the different incentives. But when it comes to the policies we want for cash management purposes, if somebody's 30 and has a brand new, whole life policy that they only took out 5, 7, 8 years ago, and they are expected to live another 60 years, that's totally fine with us. We want that kind of policy because then it can be a cash management vehicle for decades and serve the purpose that we want it for. So there, again, everybody's interests are aligned, as Jackson says. I mean, for a policy like that, there's a reason the carrier issued it. It's good for them. They want that policy to be enforced. So if we come in, it's a double whammy that's avoided, that if a policy was going to be surrendered, the carrier not only would have lost the future premium payments on that, but also they have to write a check to give the cash surrender value. So by us intercepting it, and then, it's saving the carrier. Not only do they not have to write that check in the present moment, but they also continue to receive premium payments on a policy that they, of course, wanted to be enforced. That's why they sold it to the person in the first place. And of course, from the perspective of the policy holder, they're selling it to us because we're giving them a better deal. So they're better off, the carrier's better off, and obviously the people in our ecosystem are better off as well. So it's a win-win-win, as Jackson said.
And I just want to add there that this is not like a small industry. It's not that there's 10 of every million policies that end up getting surrendered each year. Right now in the United States, it's about a $360 billion industry of policies that are just surrendered back to the carrier each year. And that's excluding the policies that are already potentially sold to external investors. And so really just trying to recapture some of that surrender market, that $360 billion, and turn that into potential investments for other investors is really the idea here.
That makes sense. And, thanks for that, both of you. And while we're on the topic of other investors, Alec, I was wondering if you could chime in and talk about, integrating our products and kind of the rest of DeFi when it comes to lending, borrowing, and kind of just, how you see our Infi products kind of intersecting with the rest of DeFi as a whole.
Yeah, I think it'll be a really cool process that will take some time and some trial and error. But I think you can look at, like as mentioned by, some of the other speakers, one of the easiest things that you can do is take a policy loan against a policy, and it's really easy to do. It's a over collateralized product that happens, every day without DeFi. I think being able to look at some of the real world asset platforms that are really focused on collateralization and lending against real world assets like Centrifuge, and some of the other more traditional players like Aave and and MakerDAO. I think there's a lot of opportunity to plug in directly with those. So I think, while we have our marketplace where we're going to be allowing for the sale and buying, as well as probably some lending and borrowing of policies, I think there's a real opportunity to plug in with other players in the space and take advantage of the ecosystems that they've built, and which, already have billions of dollars in real world assets that are being borrowed and lent against today.
Speaking about ecosystem partners, I know I guess a lot of DeFi isn't exactly built on Provenance, but arguably the largest real world asset is. I guess Alec or Jackson, if you want to chime in and kind of give everyone a brief overview of what Provenance is doing with Figure and how they've really dominated the HELOC market.
Yeah, I'm happy to start, and then can tag Jackson in. But essentially, Figure, which originally created the Provenance blockchain, and since then they've somewhat separated, but still obviously work extremely closely and intact. They've been able to build billions of dollars of HELOCs. I think it's somewhere, and Jackson can correct me, of $10 billion of HELOCs on chain.
I've heard 13 billion as of recently.
Perfect, even better. So, what they've been able to do is really focus on one market that's actually somewhat similar to the way that whole life insurance can work. And they built out, great infrastructure to put this real world asset in this sense, it's HELOCs and bring it on chain. And I think with that number, they become like the second biggest blockchain in terms of total value locked, and the first in terms of real world assets. So what they've done is essentially done a case study or done a proof of concept with one asset that they can build infrastructure for. They can take that infrastructure and use it for other real world assets similar to what we're building on Provenance, and then they can expand into all different types of asset groups and asset classes. So it's really exciting. Provenance has been a great partner with us, but we want to do what's best for our customers and the people that will end up using the platform. So there's going to be a lot. It'll be interesting to see in the next few years how different chains become interoperable. Obviously, right now there's a big focus on EVM, while Provenance is not EVM. So I'm sure in the next few years there will be some developments where there will be some cross pollination essentially of these different chains. And Jackson actually and Zuhayr are pretty interested to hear what you guys think about that as well.
Yeah, Jackson, you want to go?
I just wanted to add a little bit about Provenance's value proposition. I had the pleasure of kind of looking through their white paper the last couple weeks here, and have become very familiar with it. And so what really has just stuck out to me is the real commitment to providing blockchain for financial services specifically, and really building out functionalities and features that allow for real customization depending on the underlying asset, but really with the goal of lowering the origination and aggregation costs of assets, lowering deal costs, improving and more efficient ratings, and really just improving overall liquidity. They estimate that they can benefit potentially 100 to 150 basis points annually for specific real world assets that they mentioned in their white paper. And so it's really the pinnacle of blockchains for financial services. There isn't anything I've seen built like it. And so I'm really excited that we at Infineo are working with them. I apologize, I didn't really address the follow-up question there, Alec.
It's all great. That was great. Yeah. Anyways, I was just going to chime into you about like kind of our decision to work with Provenance over, Base or Ethereum or the other EVM chains Alec mentioned, and kind of the advantage that we get from working with a chain like Provenance.
Right. Yeah. So I think Jackson really did a good job sort of illustrating the reasoning there, but I think that part of it was Provenance specifically aims to build infrastructure for financial applications. That's the most obvious reason. But I think the other reason is because of a deep institutional community. Part of the success of an application or product is being in the right sort of time and place with respect to the community that you're building around and for with respect to the application that you're building, right? So we're building financial applications around the insurance, in the life insurance industry. And so we want to be around institutional players, capital allocators, and others like that in order for us to take the maximum advantage of community effects and network effects that come from this kind of thing. And so Provenance really has a very it is the most sort of traditional finance focused open public blockchain project that we could identify. Meaning, there are a lot of traditional financial institutions that are in and around the Provenance network. So I think community is a huge aspect of the decision, along with obviously the technical infrastructure that's purpose-built for financial applications. And then also, we obviously have won the Hash grant from the Provenance Foundation, and so that allows us to be able to operate with lower costs. So there's a I guess a cost decision there too. And yeah, so there are various reasons, but I think that Provenance is really leading the way when it comes to financial applications on the blockchain. There are others that are, I guess, viable. But the thing is, the most viable, the ones that people might consider most viable are also private blockchains. And so there's a whole rabbit hole we could go down there as to why maybe private blockchains are not the best solution for the long-term sort of DeFi, TradFi composability. But suffice it to say that Provenance, for various reasons, ended up on top of our list after doing deep due diligence on various chains.
So with Provenance being, you said, like semi-private, or I guess a permissioned blockchain, are you able to, like, I know on a private blockchain, you'd be able to like reverse transactions and change the ledger. The details about Provenance, about where that comes in terms of, the ledger and if they can change things and the transparency about it, and like, why should someone trust a semi-permissioned blockchain versus a fully public one?
Right. Yeah. So the Provenance blockchain is publicly available, but it is, yeah, like you said, semi-permissioned in that operations on the Provenance blockchain need to be sort of allowed by the constituent nodes and validators on the network. And I think that actually is a good model, quite a good model for the application that Provenance is seeking to serve, which is sort of regulated finance that tries to take advantage of blockchain efficiencies, right? That's a specific niche. I think that niche is obviously a multi-trillion-dollar niche. But I think that in that niche, this application works really well. Whereas, for example, Bitcoin being a completely open and public and decentralized blockchain with no restrictions, I think that serves its purpose as well in a separate sort of domain, which is censorship-resistant money or peer-to-peer electronic cash, as Satoshi would put it, right? And so I think different sort of permissioned different sort of permission sets and different architectures for blockchains work for different use cases. And I think specifically for the use case that Provenance is targeting, which is the use case that Infineo is building for, the semi-permissioned model works really well because it allows for regulated finance applications and also restricts a lot of the stuff that you see going on public chains like Ethereum that can compromise the integrity of the participants. So, like, for example, sanctioned money being sent to wallet addresses, pornography being displayed on chain on addresses that should be serious institutional finance applications, things like that.
That makes sense, and thank you for going a bit down the rabbit hole. And I know in your previous comment you said you weren't all too ready to do that, but you did great. Dr. Murphy, I was wondering, not to jump too far away from what we were talking about, but I know a big part of what Infineo is doing is, being able to provide life insurance solutions to, underutilized markets, and how, the products we're going to be putting on chain aren't exactly available to the rest of the world. I was wondering if you could talk about, kind of the global market and global appetite for life insurance and how it's only available in certain regions.
Yeah, sure thing. So let me just narrowly, just to keep it consistent with what we've been talking about here, just focus not so much on like issuing actual policies so people can have life insurance policies directly on them abroad, but just in terms of a financial asset. So yeah, right now it would be difficult, even though I earlier explained, and some of the other people have been chiming in too, about the incredible attributes that these specially designed whole life insurance policies have just for managing cash flows besides the death benefit payoff. You might think, well, gee, if they're so good in that respect, like presumably hedge funds and other institutional money managers, particularly those that have exposure to fixed income, they should be acquiring these things, right? On paper, you would think so, but in practice, they haven't, and there's a couple of roadblocks. I'll just be real quick here. So for one thing, it is life insurance, so there's issues about transferring the policies. It's not like a bond or a share of corporate stock. There's a lot of regulations in place, and so really you can only do this in the United States effectively, where there is a whole history of legal precedent and regulatory framework guiding the secondary sale of these policies. But beyond that too, these things are heterogeneous, right? So it's not just like, oh yeah, a share of stock is like a share of stock in a corporation. I mean, maybe there's gradations about common stock versus other types, but I mean, given the classification, they're pretty homogeneous. Whereas it's not that, oh yeah, a life insurance policy issued by this company is kind of the same thing as it. No, I mean, they're on different individuals. There's all sorts of different things pertaining to it. So there's that element. And then also too, what makes life insurance policies different from many other types of financial products is that they typically are going to have a whole future stream of payments you have to make as the owner to keep it in force. Whereas if you go buy a bond or something, it's not like you have to keep making payments or else you don't get the face value, when the bond matures. It doesn't work like that at all, right? So for all these different reasons, that's why it's difficult or it has been very cumbersome, and you haven't seen institutional managers come in and start acquiring these things in large packages. But among other things that what we're talking about here today in this Twitter Spaces or X Spaces is that once, Infineo has digitized these and converted them, we can do all sorts of things like package them, put a bunch in a pool, issue fractional tokens that are, or issue tokens that are fractional claims on the underlying aggregate cash surrender value of the pool. And then people can acquire those things around the world, just as they can acquire other types of digital assets. And so we just are really reducing the transaction costs and just bringing this whole asset class to the world where thus far they really haven't had access to it.
Yeah, that was great. Alec and Jackson, I was wondering if you wanted to chime in about, expand on Dr. Murphy's point and talk about kind of where else Infineo may be going in terms of different assets and different possibilities we can do on chain once we get these policies on there.
I would just love to hit on what Dr. Murphy said in terms of the possibility of securitizing these life insurance policies on chain and the benefits that would bring, specifically doing it on Provenance. A lot of people don't like to think that there are a lot of real world costs associated with securitizations because they kind of just seem like an abstract idea. Oh, let's securitize these mortgages into a mortgage-backed security, there can't be that many costs beyond middleman fees, but there really are. There's the origination costs, the aggregation costs, asset sale friction, securitization costs, the cost of getting rated, the cost of liquidity, and then just ongoing stuff such as servicing, custody, reporting, and trustee management. And so these are all very, very real costs that blockchain is going to help mitigate by adding an efficiency layer. And so I'm really, really excited about what we're doing with our tokenized pool of life insurance policies, and am excited to get that out to market.
Yeah, no, I totally agree, Jackson. I think, some of the exciting things around the securitization of a pool of policies is it's really the proof of concept for a bunch of different ways that we can go with it. So, first we work to tokenize a pool of whole life policies that acts as, a fixed income alternative where people can get access to the benefits of whole life without, the need to purchase a policy, which obviously there's a ton of restrictions. But then what we can also do is, build down the line different securitized products that are focused on whole life as a primary asset, which can be used to de-risk the buying of other assets down the line. So, we can use Bitcoin as an example. If you wanted to buy Bitcoin in a way that's more like how people using infinite banking would do it, people would put money into policies and then borrow against it, and then put that money into Bitcoin. And essentially what you've done is you've now purchased the amount of Bitcoin that you were going to buy originally, but now you have life insurance that's attached to it. And that's really the benefit and center around what infinite banking can provide. So what we can do is we can create this first securitized product just as a pool of whole life policies, and then down the road do other securitized products, whole life policies borrowed against, and then investing into other assets, whether it's Bitcoin, real estate, Ethereum, and we can make them all digitally native. So just easier to hold on balance sheets for crypto-based companies, stablecoin treasuries, all these different groups. So I'd say the possibilities are really endless, and we're really introducing a really well-proven concept into the ability to hold different assets. So really, really exciting.
I mean, that was a great summary of everything we have going on, and I think if no one else has anything to say, a really great place to wrap it up. But yeah, thanks for everyone who joined. For those who are just joining now, this recording will be available on our page, and everyone who retweeted it. But yeah, that was our real world asset space. We do it every other Tuesday at noon Eastern time. Next week in 2 weeks we have a great show from NAV Finance. They talk about their quant strategies in DeFi and how anyone can basically join their quant hedge fund for a super low barrier to entry. So we're looking forward to that. If you have any questions or want to join our space, please DM us. And we'll be posting clips from our podcast we do weekly. We have articles we post weekly, and a lot of exciting things coming out. So make sure to follow and stay tuned for more. But yeah, so everyone, thanks for joining, and we'll see you in 2 weeks.
Thanks for having me. This was great.
Thanks, everybody.